Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, October 5th. Firstly to the S&P 500, and here we see very strong buying in this market for today's trading, a continuation of the trend to the upside with the current candle making a higher high and a higher low. The market has actually gapped up at the open, showing the strong enthusiasm from the buyers in this market. That gap has created what we call a window in terms of candlestick charting, and the window may now provide very solid support if the market does retrace this first time frame uptrend that the market's in. Another solid white body candle. The size of the white body has extended on the size of the previous white body, and the white body is a measure of the upside momentum in net terms between the open and the close. It's the distance that the buyers could push the market between the open and the close in net terms throughout the day, and it's very, very solid. The buyers have closed with control, with the market closing up towards the highs, and we've seen the market take out two important areas of resistance, 1955 and 1968. Now the problem for the buyers here is going to be the Ichimoku cloud resistance, and the market has just tested two there and backed off slightly, and this suggests that we could see an attempt to retrace part of this very strong uptrend that the S&P 500 has been in for the past 4 or 5 days. Important trading will probably be at the open. If we see strong bullish activity, and if the market can approach the round number 2000 in a bullish manner, we could see an eventual breakout up above the 2000 number. Now that 2000 number is at the top of the Ichimoku cloud, and therefore it strengthens the potential resistance around that area. It's going to be very tough for the buyers to breach up through there, but if they are able to close up there in a solid bullish manner, and if we see a strong bullish follow through following that, and remembering that if we see a breakout from a flat part of the cloud, we can often get false breakouts. So if we see some strong follow through, if we do break out, we could then see the market test higher, possibly eventually up to around this 2040 region. If we do see the market come off, a potential support now at the 1968 level of previous resistance, and then at the 1955 level, and we should be watching the window very closely, extending down to 1951 to hold a strong support, and then the Kijun-sen may come into play down at 1946. In terms of the bands here, and here we've seen a strong bullish breakout up above the upper band, so the market is looking a little volatile at the moment. We were testing above the bands and then down below the bands in a strong bearish manner. The lack of follow through here with the indecisive candle as the market penetrated down through that lower band in a bearish manner, the lack of follow through saw that we didn't complete the pattern that we like to see with the confirmation with a strong bearish candle. We saw the buyers then come back into this market following the indecision and now close in a bullish manner up above the upper band. Now what we want to see is confirmation of this breakout. We want to see a strong bullish breakout here after this candle. If we see the market take out the swing high here, which will become an important swing high in terms of confirming the trend 2020, if we see that, it would signify that the buyers now are certainly the stronger player in the market, and would confirm the strong bullish bias in the medium term time frame. Looking to the upper band as well, 1978 are where it trades at the moment, looking to that to hold as potential support, but if we see the sellers come back into the market and breach down through there, we could see an eventual retest back down to the middle of the bands at 1947, 1948. Next to the Dow 30, and very similar type of trading activity here, but a little bit more advanced in terms of the strength in the long-term time frame. We have the market trading within the Ichimoku cloud, as opposed to the S&P that was trading just below the cloud, so a little bit more strength, and by closing within the cloud we have a neutral market in big picture terms. So there's a possibility of the Dow 30 transitioning from that strong downtrending phase, with the market trading down below the cloud for quite some time, since July, and transitioning into an uptrending phase. We have seen the top of the cloud here today hold as a resistance, as well as the 16805 level just above, and here previously we saw the market rejected from that area, so that's going to be a very, very important test for this market over the next few days trading. As we know, the cloud is flat, and very often we can see false breakouts from a flat cloud. So even if we do see the market close in a bullish manner up above the Ichimoku cloud, we need to be patient and wait for confirmation of that with a continued bullish activity. So there will be quite some time if the market does transition into a strong uptrending phase. So that hasn't occurred yet. We have established a window here down below this current candle, as we saw with the S&P, and that window is just down below the bottom of the cloud. So even if we do see strong selling coming in and the market breach down through the cloud, and just bearing in mind we could see strong support all the way down through to the bottom of the cloud around 16,400 level, we then could see strong support coming in at the window extending down to 16,472. Down below there we have both the Kijun-sen and the Tenkan-sen trading down to about the 16,370 level, so very strong support below. If we see the market to break out in a bullish manner, this previous swing high around 16,933 is going to be an important benchmark, and I'd like to see strong bullish activity certainly above that area. Moving next to the Nasdaq 100, and here we see continuation of the trend to the upside, with this market to making a higher high and a higher low. The market has gapped up more significantly than we saw with the other indices, and that suggests that the enthusiasm at the open has been even greater. The problem here is that the range has not extended to the same extent as with the other indices, and that suggests that the eagerness towards the for the whole session has not been as great. We've also seen formation of a smaller white body candle, much smaller than the previous, and that suggests that we have seen a lessening of the net momentum between the open and the close. That, even taking into account the fact that we have this larger gap here, does suggest that the enthusiasm of the buyers certainly may be waning, and that could be due to the influence of the strong resistance just overhead where the market is trading. We have a previous highlighted yellow zone that was very strong resistance, and then above there at the 14.48 level, another area that was tested in the recent past where we saw strong rejection from. So even though we are building upside momentum, we could eventually see this upside fail around this strong resistance. So very, very solid resistance above. In terms of Ichimoku, the strongest market of the three, now trading up above the Ichimoku cloud, we had the bullish breakout at the end of last week's trading, and we've now seen strong bullish follow through. So even though we've seen a weakening of the momentum, this market is still strong in terms of the buyers closing with control, and we still have very strong commitment from the buyers, so confirming that we have a strong bullish market. The window that was opened up here, if we see any selling coming into the market, should hold a strong support. That extends down to 4267, but also down around the top of the Ichimoku cloud, very close to the Kijun-sen indicator, around the 4248 level, should hold as even stronger support if the sellers do come down to test these areas. In terms of the other Ichimoku timeframes, we are bullish in the medium fast term timeframes by trading above the Kijun-sen, the pink line, and the Tenkan-sen, the green line. And we are seeing the Tenkan-sen now start to point up, and that's reflecting some upside momentum in this market, and suggesting we could see this market test to within this highlighted yellow zone, at least in the next candle. In terms of Chica span, that's within the corresponding price action. So previously we were trading down below the price action. It was confirming bearish activity. We're now beginning to transition into an uptrending phase here, and we want to see the market move higher, to move that Chica span higher than the price action, to confirm the bullishness in all three timeframes if possible. In terms of the bands here, and here we see the Nasdaq 100 still trading within the bands, and there is a possibility that we could see the upper band at the moment trading around 4354. We could see that area hold as resistance for tomorrow's trading, so we should be watching that very, very closely. To confirm strong bullish upside activity, we want to see a bullish close above the upper band and then strong bullish follow through, but also we want to see this swing high around 4450 taken out in a bullish manner as well. Just looking at some of the asset class ETFs, and TLT is the first bond ETF, 20 plus year treasury bond, and here we've seen selling coming into this market today, gapping down, previously trading just up through the top of the Ichimoku cloud, no follow through to confirm the bullish activity, and falling apart for today's trading with a window created that may provide very strong resistance. Sellers in control, trading within the Ichimoku cloud suggests a neutral market in the longer term time frame, where we're looking for a bullish breakout and bullish follow through. We didn't see see that. Breaching down through the Tenkan-sen suggests short-term weakness here too, and a very real possibility of a continuation of the trend to the downside. And certainly we're seeing a flow of funds away from the bonds now back into the equities market. Looking at the subchart here, and that's the relative strength comparative against the SPY ETF, the S&P 500, so comparing the bond market to the equities market, we are seeing it, the relative strength comparative now within the band, suggesting no outperformance here. And over to the right hand side on the subchart, and it's the momentum of the relative strength comparative to the equities market. It's coming off. It is still up above the 100% level and positive, but decelerating and suggesting that we certainly could see this ETF continue to underperform on a short-term basis against the equities market. On the bands chart here, we see the market moving back within the bands, and that strong outperformance in band performance here is no longer in the market in the medium-term time frame, looking to the middle band at 121.82 to hold a support. And to the gold ETF, and some selling coming into this market on the Ichimoku chart. A bearish candle here. The sellers have attempted to take control of the market. There has been some price rejection from the support at the bottom of the Ichimoku cloud, but we are trading within the cloud and suggesting a lack of clear direction here in the longer term time frame. If we do see a breach down below that cloud support, we could see the market test lower down to the Kijun-sen indicator around 108. In terms of relative strength, underperforming the overall market just, but no strong underperformance. But if we look on the right hand side, and the momentum of the relative strength is trending down very strongly, moving towards the 100% level, decelerating and suggesting that we could we could begin to see some underperformance in the gold sector versus the overall equities market. VNQ is the REITs, the REIT ETFs asset class, and here we've seen a bullish breakout up above the Ichimoku cloud, so a bullish market in all three timeframes on the daily charts, supported by the checker span. We want to see strong follow through here to confirm, but no longer outperforming the overall market. So even though we're seeing strength here, we have seen a flow of capital back into the equities market, out of this market. The flow of funds is still into this market, but not as strong as it was previously. Moving to the right hand side, and we are trading up above the upper band, so suggesting a strong bias here in the medium term time frame, and it continues, so continued strength possibly, and taking out that swing high in a bullish manner suggests we could see continued upside. If this REIT does ETF does come off, looking to the upper band at 76.52 to hold a support, but looking at the momentum of the relative strength, it is up above a 100% level, but just down towards that lower band and decelerating, so the outperformance is no longer in this market in that shorter term time frame.